Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Thursday, the 12th of May. All right, now, unless you've been hiding under a rock, the US inflation numbers came in much better than expected. Let's move that up a touch. 8.3%, 8.1 was the expected, and the non-seasonally adjusted 0.6, I think it was 0.4 was expected there. So really strong numbers, confirms that the Fed are way behind the curve on getting control of inflation, higher interest rates. The equity markets, it was a sea of red. That's continued through the Asian session with the US equity futures. And we do have a pretty clear-cut risk-off situation where Euro, Sterling, Aussie, Kiwi all getting belted, right? And it's funny how these things can build up and then all of a sudden they're miles apart. But one of the key things here is, don't get confused. This wasn't as simple as it looked, right? Now, if I show you the charts, it's a bit of a bloodbath. And you know what? You can never tell until after the event whether you should have held off, or because like an hour or two afterwards, it becomes very clear. The market's repositioned itself, flushed out any old positions, and then it starts to move with the new information. So sometimes that can just be one big move. Otherwise, it can be a whipsaw. Now, if you look on most of these instruments, it was pretty damn nasty, right? So this is, if you have a look across all of them, Sterling, Aussie, Euro, Kiwi, all of them for that matter, these are the currencies. You can see clearly where it sort of dropped like 70, 80 points, bounced back 100, and then started dribbling off from there. So it hasn't been sort of apparent until during the Asian day that, you get short. And I was talking about this yesterday, looking at getting in below 105, the figure in Euro. You're looking for levels, right? Just to get in, because it's already gone. Like 2 weeks ago, we're at 110. We're at 104.5 here. Sterling's at 121. Aussie's at 68. If I can just look around the corner of my screen there, and Kiwi's down at 62. Like, this is a bloodbath, and it's not over yet, right? There's plenty more to come because the Fed, with those inflation numbers, have plenty to think about. The one surprise here is the exodus from the yen sort of safe haven trade. It's getting whacked as well. Steady move on dollar index and dollar Swiss, and dollar CAD starting to chime in there as well. So pretty, I just got to reiterate, it's sometimes when you see the move and you see the data, you go, oh yeah, I should have got that trade. Well, I tell you what, you're probably lucky if you missed it. Once again, the global currencies, well, the instruments, I should say, the gold, pretty steady, right, amongst it all. And if anything, oil's managed to pop back above the sort of technical levels here. If anything, the technicals on oil are a bit of a bloodbath. The one of the key ones that I've been sort of reiterating, and it's very clear to me that there's a strong connection between the cryptos and the equity markets. And these things are cleaning out the downside just at the moment, right? So it's going to be interesting to see what happens from here, because once you start to see the writing is clearly on the wall, no one from the Fed has really come out and said, you know what, we're going to change the interest rate, our forward guidance, which was 0.5% June, 0.5% July. That may change to 0.75. You know, it's very rare that you see the central bank change the plan. And Jerome Powell was pretty clear last month saying, this is what we're going to do. We're taking 0.75 off the table. It probably still is, because it's still 8.3. The previous number was 8.5. So maybe he's bought himself some time. But what we are starting to see is the numbers really starting to escalate. I would expect you'd expect a bit of a beating on the downside again, month to date. The equities, well, not so bad. Year to date, it's looking a bit ugly. As I said, you get another 5 to 10% here. They're down 30, 35% for the year. It's starting to get pretty ugly for the equity markets. And, the cryptos have enjoyed a pretty, blue skies. It's been all great trading. And if you're looking for some action there, like these are on the margin side, great trading opportunities. Year to date, some of these things are down 60%, which just goes to show you how overvalued they were at the start of the year. Now they're sort of coming back to probably where they should have been, not up around 70,000. Bitcoin's around 26. So what's the plan from here? Like, it's all good and well and good to know what's going on. Well, to me, think of the bigger trends, right? So equity markets should go lower, continue lower, right? That's going to put like the risk on profile. The dollar should rally across most pairs. It's not doing it against the yen, of course. Euro, sterling, Aussie, Kiwi should head lower, right? This is, if you go back and look through the global financial crisis and any sort of major moves where the central banks have been caught off guard, these moves are long-standing, right? We're talking medium to long term now, and the rut is set in. So I'd expect those to continue. What happens with the commodity markets? Well, once again, there's all the rumblings around the China lockdowns and how that's going to slow growth, and that should slow down or push down the price of commodities. We have seen it come down dramatically. You'd expect that to continue, but the sea of red up here in the North American equities will dominate global equity markets, right? If you're not sure about how the global markets work, the US market is like the nucleus, and then everything emanates out from there. So you've got to expect those global markets to continue lower, and we'll see how it goes. The thing is, what can happen is it can get so crazy, right, with the dollar moves and these moves here on equity markets, that we do start to see the safe havens come back into play, right? Buying Swiss, buying yen. Keep an eye on that as we go, maybe even Bitcoin as well. I don't think we're there just yet, because the volatility index isn't quite through the roof yet. If it gets above 40, then we'll start to sort of worry about that. But that's where we are. So if you are looking at, I mean, as I said, it's very hard. Once these instruments start to go, you're looking for sort of key events to sort of get in. Let me just see what screen I'm on the charts there. So, like, realistic, you're looking for levels to sell on rallies, right? Get these currencies higher, and they won't just go down like a lead balloon. They will have opportunities where they pop up and they go down, and same with the dollar pairs. You expect a dip. I'm sort of very confused with what's going on there. So a dip in dollar Swiss and maybe the dollar index as well. So see how that plays out. And the global pairs, well, you've got to be looking at getting short equities, I guess, on any sort of bounce, right? It's these things are heading due south. They've had a really good 10 years, but now that interest rates are going up, and it doesn't look like they're going to stop anytime soon, right? What the Fed's trying to do is stop inflation probably going above 10%. By then, they've lost complete control. Interest rates could very quickly go up to about 15 or 20%. And I'm not trying to be sort of like a fear monger, but that's where they were in the 80s, right? 17 to 20%, right? So don't think it's when I first started trading, we were just coming down from 15 to 17% in Australia. So it's we're on the way back there. But what you're going to see is, like Euro here, we're starting to free fall. Okay, this is where, when it starts to free fall, why is it doing that? Because there's no buyers, right? No one wants to buy. The only people who would be buying Euro down at these levels are people taking profit. So when you are looking at the markets and you're trying to work out, oh, do I get long? Don't fight these trends, right? As I was sort of saying yesterday, I drew this trend line. That's the last level of support. It's already broken down on the dailies, weeklies, monthlies. So that was your target above 104.80. If anything, potentially selling back towards that is a goal. The other thing you should be doing is going through each of your instruments, right? Trying to find out where those key levels are on any of them, because you might find one. If you don't go and have a look, you'll never know, right? It's not my job here to find you all the trades, but just keep an eye on that as you go forward. I've got all the daily charts here that can sort of tell me where things are going. And on this chart here, this, as I said, these are sort of more longer term moves. You can see very clearly Euro, Sterling, Aussie, Kiwi, dollar yen, dollar Swiss, dollar CAD, and the dollar index. You put it on a longer time frame, it becomes very clear where direction is and what the trend's doing. Your job is to get onto it and hit those trends. All right, guys, have a good one. All the best. Cheerio.